All right, everybody. We know who the true adherents are, sticking around for a community bank conversation
Right before lunch.
right before lunch.
I'll see you're chasing someone out now.
Right, exactly. So, I'm Michael Hiles. I'm CEO of 10XTS. You may have seen me on a couple of previous panels. We do regulated digital assets, and we've got a little bit of a bank experience background. I'm going to ask each of the panelists to just quickly state your name, your rank and serial number, your organization, and we'll get through and get into the meat and potatoes here. So, Jerry.
I'm Jerry Dwyer. I'm a professor of economics at Clemson University.
Jonathan. Hello. Push up. Yeah, I did push up. Hello. Jonathan C. Dunsmoore, corporate securities lawyer. I've been in this space since late 2016 when I had a bunch of people trying to figure out what the hell an ICO was. Hello.
My name is Brian Houillion. I am the program coordinator and assistant professor of the Masters of Global Business and Blockchain Technology at the University of the Cumberlands in Kentucky.
Super. So we've got an interesting angle on the conversation regarding stables, Bitcoin, and community banks. Oh my. So I've got a series of questions for the esteemed audience here, but suffice it to say our background is absolutely in bringing the technology and the product lines to traditional banks. And so, Jerry, from your perspective, since you're a banking guru when it comes to the history of banking, talk to us a little bit about back in the old Wildcat days. They used to have this stuff called bank scrip. How does that correlate to both the opportunities and risks for small community banks in the emergence of this new technology arena?
Yeah, okay. What a lot of people, us Americans, we always think of our experience and ignore the rest of the world, so I'm going to do that. So in the U.S., there was a period called the free banking period, where it was relatively, in a certain way, it was free entry. If you satisfied the requirements, you got to start a bank. There was no discretion about whether you could start a bank or not. Whereas now, of course, you can say, well, I want to start a bank, and then the regulators just say, well, we don't think they need a bank in that community, so you don't get one. And so that's very different. Okay, but there are other, what we're talking about here is these banks issued notes that passed from hand to hand. You can find pictures of them on the internet. And they have the name of the bank on them, and they promise to pay $10 or $5 or whatever, and then they circulated, and they were currency. Some people think it was the quote Wildcat banking period, but it wasn't. That was actually a very short period at the start in Michigan, and it was called Wildcats because the banks are located where wildcats roamed. Michigan at that time, it's hard for me to think about this, having lived in the West a long time. Michigan at that time was the frontier. And at that time, actually, it was the year that the telegraph was invented, not even implemented. And so communication was very different. A lot of things were really different. And in the end, what I conclude in a piece I wrote actually is that what you can learn that's useful for current regulation of banks and issuance of stablecoins is pretty much nothing. I mean, you could learn a few things not to do. Seriously. See, like what they did was they had 100% backing, but the 100% backing was long-term bonds. And that was not good. When they were, for a variety of reasons, they held mostly Southern bonds. At the start of the Civil War, Southern bond prices went down, and so all their reserves evaporated. Most of us now, of course, would say, no, short-term assets, please. But there weren't any short-term assets then. That's part of what I mean by the amount you can actually learn from it is pretty much zero. Is they didn't have any short-term assets. Why did they buy state bonds? Well, there weren't any federal bonds. Literally. so the world was just really different, and we have more than the telegraph. We have the internet, and that affects communication and everything else. And so there's a board paper where they tried to draw an analogy between this period and stablecoins, and it's just all wrong.
Thank you. So, interesting you bring up the word bonds, right? So, in earlier eras, not in the frontier West, but let's say in the early 1900s moving forward, community banks were instrumental in financing of public infrastructure, for example. Jonathan, how do you see as a securities attorney the opportunity to leverage the technology to return to a form of municipal bond financing through community banks that leverages the tech and the opportunity for even economic participation in the opportunity to basically reap the benefits of that which your taxes are already paying for as a local community?
Yeah, that's a really great question. Oh my gosh. So I'm going to try not to go into too much of a diatribe. I currently believe that DAOs, decentralized autonomous organizations, are the kind of next frontier of democracy. So if you take that premise combined with Bitcoin and bonds on a blockchain, you can possibly utilize a more effective government. And I know that's really controversial, where you actually get to possibly vote and have a say of where your money is actually going. And so I'm in Buffalo, New York right now. I grew up in Spartanburg, South Carolina. Both of them have tremendous effing infrastructure problems that I wish the people could address by simply being able to vote where our tax dollars go. And that's basically what those bonds would give us. It would give us a voice as citizens of this great country to say, hey, I really need you to fix the potholes in Buffalo, New York. Hey, all of the traffic lights that need to go up in Spartanburg, South Carolina, so the entire thing's not a damn parking lot, would really be beneficial to the economy that you're building up there. Because while it's really great, boy, is that thing really miserable to be trapped in a car for an hour going from Spartanburg to Greenville, right? And so at this point in time, us little citizens generally have a better idea of what's going on in our community than the big guys, than even Curtis, who's got all of those billions of dollars to spend and doesn't necessarily know where to spend it. I imagine some people in here have an idea, and so with bonds and with digital instruments like that where you can actually see them being utilized, possibly in the real world, God forbid, I think that we're onto something really revolutionary, because not only can we say where we want the money to go, we could possibly use data and data analytics to show that it went there. And so that, for the first time in history, as Jerry can attest, is absolutely revolutionary.
Awesome. So, Brian, given the possibility of voting on where to send the money and how we borrow the money is still subject to, call it localized need. We just had a hurricane come through, right? And so I know that you've got a background and understanding in state and local government finance. What are the opportunities for community banks to sort of bring a real world product to the table in the nearer term around things like FEMA gap funding or products that community banks can offer to their local constituency today to participate in the tax-free revenue of bond coupon payments, but the average citizen being obviously locked out of that because it requires a pretty sizable check to participate in a bond offering?
So, a few things there. The need for community banks to adopt custody of digital assets is very important. I have a friend that we've talked to when BB&T first started expanding into Kentucky. They're out of, I think, North Carolina. They came in, bought up a local community, bought up a community regional bank. They lost a lot of the staff that had been there prior because they didn't have the local control they needed to serve the community. Everything was coming out of corporate. So If community banks don't adopt this soon, you're going to have the bigger banks do this and leave the community banks in the cold or to be bought up by the bigger banks. So that is one important aspect of the adoption at the community bank level. But to your question, municipal bonding is very restrictive. It costs a lot for the issuer, whether it's a city, a school district. It costs a lot for them to issue it. Then it's restricted because it's not really open to everyone. The smallest shares are usually about $5,000, which is a little high for just your average citizen. Prior to the 80s, this was not the case, and you would have grandparents that would buy their kids municipal bonds, so they were investing in their city. The kids were starting to understand finance. They had the opportunity to participate in the community, but that's changed. Municipal bonds aren't even traded on a market. They're still traded over the phone. So you cannot go out to a website or anywhere and buy municipal bonds. I was a city manager, and I was in 2 different cities. My first city was a very poor city. We needed municipal bonding, but it was too expensive. The other city I was with, they were very well off and didn't need the bonding. So you don't have that opportunity for your cities that need it, such as the first city I was with, to go out there and get the funding they need to continue to develop. They would have to just rely on IRBs, which is where someone else pays for the bond versus the general obligation where our taxpayers pay for that. But again, you're bonding because of the cost. All that money leaves your community. I'm from Kentucky. We've had a lot of issues with Eastern Kentucky with the dying of the coal mining industry, a lot of infrastructure needs. But they have this need for the bonding. But if they put out a bond, all that money is going to go right to Wall Street and go into someone's mutual fund or somewhere else. And those citizens of Eastern Kentucky are going to be stuck paying for these developments without getting that opportunity of the tax-free interest. But this also provides one last opportunity with the community banks. Right now, if you have a savings account, what is that annual percentage rate you're getting? It's less than 1%. Now, some I've seen are less than 1/10 of 1%. A tokenized, fractionalized municipal bond can now be a savings instrument for the common people through the community banks. Now they will be getting an interest rate of 3 to 4%, possibly a year, which goes back to when I first got my savings account. I think in the 80s when I was a teenager, that's about where the percentage rate was for the savings. So this will actually help keep money in your districts and also help build wealth in the future. So I think that's the opportunity.
Thank you. Jerry, you're chairman of the board of a large regional community bank, and you're forced to make decisions for survival of the fittest as community banks continue to shrink in number and get consolidated upwards or out of business. Bitcoin, systemic banking risk, or something to appeal to a younger demographic banking customer, which community banks also desperately need?
Yeah, personally, I wouldn't get into holding Bitcoin. It's just too risky. But on the other hand, in a direct sense, but on the other hand, you can provide the equivalent of, you can provide custody arrangements for people. And to some degree for younger people, it's not as big an issue, but I know me personally, like buying a personal wallet and sorting out how it works, and then you've got to sort out 16 words that translate into a key. I mean, it's not trivial, even if you are familiar with computers. And you can leave it with Kraken, that's true, but then you can compete with Kraken by offering to keep it at your bank, and then if you want to sell it, we'll sell it for you, and you can move it into your checking account. I mean, you can provide certain personalized services that Kraken actually can't, because it's an exchange. Well, although they're getting a bank charter. Yeah, as you know, they have one. But so you can provide certain kinds of services, and that's the direction I would go into, personally.
If I could speak on that, the other thing that community banks could do that larger banks are very gun shy of, I won't name anyone particular, but we have a probate issue. When you die and you do not have access to your 16 phrases or your 24 phrase words, we have a real issue. I experienced this personally this year when I had a good buddy of mine from Dorman High School pass away. And then I had a phone call about a month later from another colleague from Dorman High School who was a lawyer who had his estate and said, we know he had Bitcoin because he followed you and listened to your craziness, but we can't get it. We don't know where it is. We have a screenshot. We don't know what account this is. So I think that is one of the most important things that if a community bank wanted to figure out right now, we could do that. And somebody in here could do that.
Brian, systemic risk or opportunity for community banks?
I think it's definitely an opportunity. They will have to evolve, as I mentioned before, into somewhat of a different entity, but they are important. I also want to add in not just community banks, but this also applies to credit unions, which is very important. And my guess is will see credit unions adopting it a little quicker. That's just a guess. But the biggest issue, and we've talked to community banks about the digital custody coming out of the OCC interpretive letter back in December, where they were permitted under a no objection letter to do this. But one of the biggest pushbacks we've got, even from some of the front runners in technology and fintech, the biggest pushback was, we don't want to add another system. When our core banking service adds it, then we'll adopt it. So not just getting the banks involved, but actually getting those core services, banking services, to see the need there and to either contract to add the service or invest and do it themselves. I think that's, right now, it's the biggest issue. There's probably ones that want to do it, but they're not adding a whole completely separate system.
Thank you. Jerry, we have a cool project right here in South Carolina, the new Catawba Nation Digital Economic Zone. In fact, I think maybe Joseph was supposed to come today. But not only are we seeing a novel de novo form of banking charter emerge out of states, but now you have entire de novo government opportunities where the Tribal Council of the Catawba Nation has decided to, shall we say, casinoify fintech within their jurisdiction. How would from a community bank and a state government versus a special sovereign sort of government within the boundaries of the state, how do you see these balances between a sovereign tribal council that says we've got the authority to create our own forms of charter, our own forms of governance and compliance, and how do you see that working from a even a broader economic basis where there's all of a sudden an entire overhaul in the approach to licensing, chartering, how we even think about banking with a brand new government structure that's happening right here in South Carolina?
Okay, I don't really know about the developments in South Carolina. So let me make it really precise. Okay, so you've got some Indian tribe and they decide they're going to issue a cryptocurrency and they're going to start a crypto bank, all right? And they say, we have the power to do that. And suppose that they do, all right? There's like a couple of issues that arise here. One of them is, do they actually know what they're doing? The thing is, I mean, it's like you watch people with Bitcoin, okay? There are lots of people who are fooling around with Bitcoin who haven't got a clue what they're doing. And what they're doing is not even very sensible. It's like, oh, I'm going to invest all my assets in Bitcoin. It's like, well, you might lose them all. And if you can live with that, then you're fine. So that's an issue, is whether they really know what they're doing. The other issue is who's going to deal with them? Who's going to be a customer for them? I mean, there are sensible people in the world. And you might say, well, this currency is issued by this tribe, and I think they haven't got a clue what they're doing, so I'm not about to touch it. And so I think it'd be a hard road to hoe, personally, to get it all to work and get everybody on board. And actually, I mean, you can do the sort of what I think of as the Bahamas thing, which is you can say, okay, you're at our casino, we have to give you change. We're giving you our money, because that's what happens in Bahamas. It's hard to leave without some of their currency. You can spend dollars, all right, but you can't receive them. And so you could do that to some degree. Now that raises the cost of being at the casino, actually. And so you might be better off just having lower cost, making it cheaper to be at the casino, and people will spend more money. So I'm kind of dubious about anything coming of it.
Jonathan, riff on the Catawba project. What are your thoughts?
I actually can't speak on it due to conflicts of interest, so I'm going to have to punt the ball.
I didn't realize you were deeply involved in that.
I can't say any more about it.
There you go. Attorney speak right there. Brian.
So I think it's an interesting experiment in state government. They are claiming to be Delaware 2.0. They want to have the businesses file there to operate wherever they're operating, but at least to be filed and registered within the nation and the zone. Having been in the state and local government, I find the creation from scratch of basically a state government is fascinating, and love to see where it's going. They've adopted DAO regulation. They were the first to adopt the new UCC language into the commercial code. And there's a few other developments that they're working on, and they should be registering businesses, from my understanding, within the next few weeks. So overall, I think they do know what they're doing. They have a big list of advisors and the contractors that are running that. So it's being done by advisors that know what they're doing, and contractors. So I think it's got a good shot of being successful, but again, it's an experiment that I can't wait to see how it turns out.
Great. Well, we got a couple of more minutes here. I want to open up the floor for questions to the panel, in particular about any of these banking, local finance, banking services. Yeah, Eric.
So real quick, the idea of decentralization is the premise for the whole blockchain thing, right? And so when banks try to adopt things based on crypto in general, they have their own governance and laws they have to deal with. So more specifically, how, if you make your own coin from, if you're a Indian nation or whatnot, right? You really can't govern the use of it, right? So it's like people use it because they want to. That's the whole idea for Bitcoin, is to provide transaction capability for non-banking people with no bank accounts, right? So specifically, you can create a crypto all day long, but how are you going to ensure that it starts getting used by anybody? And that's really the decider.
Yeah, so one quick fundamental problem there is don't necessarily focus on the decentralized element of it, right? Start and say this may be a centralized issue, and then some parts may be decentralized possibly later. I think decentralization is something that we may evolve to, but right now it's still, I mean, to say it's in its infancy is to do a disservice to infants. We still have to figure out what a DEX is, right? Because if I want information from a DEX, I can get it. I can subpoena Uniswap, and I know where their offices are. Like, we can make all kinds of hell on them, right? Does that mean I'm going to get the transactional information that I'm going to need to go after somebody? Maybe. It depends on the nature of the transaction. And so we have to kind of look at this depending on what problem you're trying to solve for, and don't over solve for the solution. Blockchain, think of blockchain as just a form, a mechanism that allows you to say this is an immutable transaction, you can't go back on it. And we can all, ideally, if it's a public chain, we can all see it. Or if it's a private chain, we can all, as an inclusive group, see it and make sure that that deal was done. And so it's not something that's a one-size-fits-all, and that's the most important thing. I hear people that say, oh, Bitcoin's going to revolutionize money. It's going to be a part of that revolution, but is it that single solution? Hell no, or everybody would have it right now.
And also, I think it's outside the cryptocurrency. You got to think of it broader, not just issuing their own coin. This is the custody of digital assets. So one of the important, I don't know if it's discussed in the real estate, but one of the issues you have is if you do a complete cryptocurrency exchange for real estate or something else, you have requirements for that escrow of a third-party custody. You don't have anyone that can do that right now for a lot of states. So that's one of the other services you have. You're going to have digital securities. You're going to have, digital commodities, all these other things. So it's going to be, I think, within that realm and not necessarily the cryptocurrency specifically or a bank issuing its own coin to be rival the dollar or whatever the currency is in the locality. So it's more of that custody aspect versus the crypto.